one tool, I'm not gonna lie to y'all, has definitely improved my win rate from probably I would say around like a 60%, getting closer to that 75 plus 80 plus win percentage, right? So I'm gonna go ahead and break down the Fibonacci, right? But not only am I gonna break down the Fibonacci, give you all the exact settings that I use, but I'm gonna show you all the two different models that I actually use, this tool with, right? And like I said, you can go from, some of y'all might have a 40, 30, 40, 50 win percentage. You might just waking up, clicking buy, clicking sell, not really knowing what you're doing. But look, just off of this model alone, I can assure you at least a 70% win rate off of this tool right here. I'm about to break it down right here, right now, just because in my recent couple videos, I've been doing a lot of strategy breakdowns, a lot of live trade breakdowns, things like that. And I've been getting some comments. People asking, yo, what's your Fib settings? Yo, how do I use the Fibonacci? Boom, boom, boom. So let's go ahead and jump straight into it. So first things first, this is off of today, right? New York session. So y'all know I trade NASDAQ, New York session. And so there's two things with the Fibonacci. Well, one, first, hold on, let me get the settings for y'all. So it might look pretty ugly at first when you first plot the Fibonacci, right? So let me show y'all where to find it. It's going to be right over here. Fibonacci, I got mine starred. I got it favorited. So, my toolbar right here, the couple tools that I normally use, which, this is the most important one. So I got them up there favorited just like that. Boom, simple. So now let's go ahead and get into the settings so I can get y'all shit looking clean like mine. Because I ain't gonna lie, the first time you pull that Fibonacci out, it's gonna be hella rainbow color bullshit. Let me fix that up for y'all right here, right now. So go ahead and either double click it or click over here to the settings. And now what y'all want to do is, so for me personally, what I did was one, change all these to black, right? Change all these lines to black just so I can keep my shit nice and clean. I changed all these to black. And what you also want to do is edit these numbers, right? So if your screen doesn't look exactly like this, go ahead and pause, go ahead and look side by side and, replicate this exact setting, right? We have our 0 checked off at black. We got our 62%. We got our 79%. We got our equilibrium, which is the 50%. We got our OTE, right, which is our 70.5%. And then we got our whole numbers. So this is the settings right here, plain and simple. Now let me go ahead and break down how we can actually use this on a day-to-day, week by week, month by month, way to clock in these motherfucking profits, boys. So look, off rip, this morning, right? Today is what? You see it? April 2nd. No April Fool's shit, my boy, April 2nd. So look, off New York Open, right here, we're looking pretty bullish already, but y'all know we don't just chase entries, right? We need to get a good entry point. So we're looking pretty bullish already, just didn't have really like a good entry point yet. So price came up at 930, almost touched these highs, and then turned around. So me seeing this, right, I'm still banking on the bulls, right? As much as prices, going down a little bit, I'm still banking on the bulls. But right now, currently, we're selling off. So in this case, let me show y'all how you could have used the Fibonacci this morning and made some crazy profits. So off rip, normally, this is a little bit extra. I wasn't even gonna review this, but I feel like for my people who's a little bit more advanced, let me just break this down for you real quick. So normally, right? Normally we would take our fib from this low up into this high, right? When you see a large impulse move breakout like this, we want to normally take our Fibonacci from this low to this high. But like I said, I wasn't. And another reason, look, if y'all watch my recent video on, the 7 steps that you need, you'll know that this is it right here, right? This is what gets us our entry model. We got a little bit of a fair value gap right here in between this 1 minute. We had the OTE lined up. So, Bray, why didn't we get into the buy? Why didn't we, just like we normally do, right? Because today, I want to show y'all, like I said, I was already bullish on the day. But when I seen this play out live, I'm going to be honest with y'all. This bearish candle right here, it happened so fast and so quick. Honestly, it was just a little too bullish for too bearish for my liking. So I said, you know what? Price definitely could have played out right there and turned up. And we could have made hella profits just off of that right there. But me personally, like I said, it was just so extremely bullish within that 1 minute I say, you know, okay, let me be patient. Let me just make sure this is the real move, right? So I didn't pull the trigger on that one. Now this is where the trade of the day was right here. So look, once we came down, you know, we flushed through this fair value gap in this OT retracement, right? Price made it seem like it was still bearish, but not really. All we really wanted to do, well, all price wanted to do real quick was obviously sweep this low. You know, these minor sell side liquidities. Price came down to sweep these, right? But what happened right after he swept it? So boom, from this low to this high, right? That's a pretty large impulse move, if you ask me. We were going down, let's say what? We came all the way from up here. That's about 100 points, right? So we came about 100 points down within a couple minutes, and then suddenly went 60 points bullish in 1 or 2 minutes. That's obviously an impulse move, right? So as soon as I saw that, that's when you take the Fibonacci. So in this case, right, this would be our reversal model, right? As much as, you know, I was already bullish, price did end up sweeping our sell side liquidity. So now it's reversing back into the bullish market. So this wouldn't be a continuation. This one is more of a reversal, right? I saw one of my comments saying, how come when liquidity gets swept, sometimes you could do, you know, a continuation and sometimes you can do a reversal? Well, in this case, I already predetermined that my bias was bullish, right, for the day. So once price came down here and swept this low, okay, well, now I'm expecting a reversal because I'm bullish. But if I was bearish on the day, obviously, you know, I'd probably wait for price to come down, retrace up, and probably get into another sell, right? But having that overall directional bias and knowing what I'm looking for in the higher time frame is what led me to not thinking that this was a continuation to the sell side, but me knowing that this was, you know, a flip to the upside. So like I said, taking this Fibonacci from down here, and I would like to say you put the Fibonacci at where the move is, right? So the move that you're, you know, the range that you're working in, right? The move that you're analyzing, you want to take it from sometimes either the low at the bottom of the wick or sometimes at the body. It just depends on, you know, what makes more sense. In this case, this is an extremely large wick. This is pretty fair volume, pretty fair price action. So I'm going to take it from this low. Now, if it was an extremely large wick or it would just happen in half a second and, you know, price wasn't really doing that, then you could take it just from the body. But for now, from this low to this high, obviously we come up, we come down right into our OTE 70% level. At that point, that's when you could easily just boom, punch in the buy right there. Go ahead and put your stop loss at the low. And what do you know? Target this liquidity that we had up here, because that's what made us that's what made us bullish, right? That's what gave us the bullish bias, is knowing that we had this liquidity up here that price almost came to but failed to sweep, right? So that's how we could take the Fibonacci tool and spot reversals and actually get the best possible low risk entry with maximizing profits. You see how this went up all day. You feel me? Very minimal risk. All right, so I'm gonna show y'all one last model, right? One last good example. This one will be the continuation model, right? So, you know, this is the last one real quick, and I'm gonna head out of here. One of my students actually, you know, wants some one-on-one help, so we're about to lock in a quick session and break down some one-on-ones. But for now, though, like I said, just watch this video. If you have any specific questions, I'm going through all the comments, trying to, you know, like I said, just trying to educate y'all, man. So I know it's harder when you can't just ask me questions directly. We could just chat back and forth and hop on a quick call one-on-one, but hey, I'm trying to make the most out of this YouTube shit and bring y'all the most sauce that I can, right? So, boom. Any questions, drop it in the comments. I'm making more videos all month, man. We already done posted, what, 3 days in a row? All the rest is April, man. We're going to be going crazy, so let's get it. So right here, we have this example, right? Price was, you know, it was pretty stagnant. It was just consolidating a bunch. It decided to break up here for just a moment and then suddenly make this large move, right? Obviously, just looking at this alone, you know, it wasn't really an opportunity to really get in this move, right? We didn't really know price was going to sell off. It just kind of just suddenly took off, right? That's what the Fibonacci is perfect for. It gives us an extra confirmation. So instead of just trying to chase a trade and just get into a position, you know, just cherry pick a position that might play out, the Fibonacci is going to give us that extra confirmation on a move that most definitely should play out, right? Like I said, take your win percentage from 40, 50, 60 and get it to that 70, 80 elite high win rate status, right? So boom. The first thing I want to spot besides this bit large impulse was, okay, so say this played out in our face. Large impulse move, swept some of these lows, right, which clearly has been consolidating for a while. So swept some of these lows. That's, pretty significant. And boom, what do we see? Left us a 1 minute fair value gap right here. And this one isn't as, strong to me, but it also left one here, right? I like this one more just because it's at the top of the move. It's more of just an impulse break and then breaking down more versus this one is a little bit more, you know what I'm saying? I like this one a lot better, but overall, 2 fair value gaps, right? I'm going to only highlight my desired one just because I want to get the lowest risk, but maximize the highest profits. So I'm going to take this one up here. If we take our Fibonacci from this high, right? We're just going from the move that we're looking at. We take it from this high to this low. Or let's stretch it out a little bit so you can see. And what do you see? So y'all know price action is not going to be perfect, right? That's why I'm glad to show you this example, because not everything's going to be, picture perfect, sunshine and rainbows in the trading markets. So obviously, it went past our OTE just a little bit, but we could have low key even knew it was going to do that and even decided, we have these specific levels for a reason, right? We got our equilibrium, we got our 62. Now, I would say y'all can take entries based on anything in this zone, right? Between the 62 and the 79, right? Sometimes I've taken trades off the 62. Sometimes I've taken trades off the 79. But ideally, our optimal trade entry is at the 70% level, 70.5, right? So, don't feel like just because it went past the OTE, this isn't a good trade still. This is still a good trade. It's just not always going to be sunshine and rainbows and picture perfect price action. We got to know how to still maximize opportunities even with the price action that we're given, right? So boom. And this is fair right here. We got our fair value gap, right? We got our large impulse move. It swept liquidity. We got everything in line. All we got to do is wait for the Fibonacci retracement. You know what I'm saying? We got to wait for the double confirmation before we try to get into the sell. That's really all it is. We got everything telling us that price is bearish. We just need a confirmation on when we should get in with the right setup and the right risk to reward. So boom, that's when we spot our fair value gap. Boom, we take our Fibonacci tool from the top to the bottom. What do you know? OTE here, 79% level here. So me personally, hey, if I see this live, I'm going off the 79 on this one. I see the fair value gap, boom. I see it all makes sense. So I'm going to take that, boom, put my stop loss right at the high, risking about 30 points. Now, that's a little bit more than my liking, but y'all know it's not really just about how many points you're risking or, you know what I'm saying, how many. It's not about that. It's about the risk to reward at the end of the day. I could risk 30 points, but as long as I'm going for, which we could target this low right here, as long as I'm going for a 1 to almost 1 to 4 risk to reward ratio, that's perfect, right? Now we can even zoom out into the higher time frame, and I'm sure we could find some more liquidity, you feel me, that we could target and give us a better target to the downside to make more profits. But that's just the most recent one right here that I personally would take. Y'all know I'm not no trading gurus making shit look perfect out here, making 50,000 a day and boom, boom, boom. I'm showing y'all realistic shit, right? So 1 to 3, 1 to 4 risk to reward ratio. That's something you definitely could have clocked in just off of either continuation or reversal off of this Fibonacci.